What's happening in the digital frontier? The pace of innovation is absolutely blistering, and you need to stay ahead of the curve. From major tech giants making bold moves to exciting new opportunities in virtual worlds, we've got your unmissable updates right here, right now. Get ready for a rapid-fire rundown that you won't want to miss. First up, a major player is making waves in the metaverse with a strategy that has analysts talking. Then, we dive into a massive token airdrop designed to supercharge engagement in a popular virtual world. We're also looking at a critical take on a tech giant's ambitious AI plans and whether they could stumble. And finally, we explore a company's strategic vision for resilience and growth in the ever-expanding metaverse landscape. Stick around, you don't want to miss this. Make sure to hit that like button, subscribe, and ring that notification bell so you never miss an update. Meta's bold bet. A high conviction buy amid metaverse momentum. Meta Platforms is once again at the center of investor attention, with its metaverse ambitions and evolving monetization strategies positioning it as a high conviction buy for some market watchers. This move comes as the company navigates a complex technological landscape, attempting to solidify its position in the burgeoning virtual economy. The tech giant's commitment to the metaverse, despite past criticisms and market skepticism, remains a cornerstone of its long-term vision. Meta Platforms, formerly Facebook, has invested billions of dollars into developing its virtual world, Horizon Worlds, and the underlying hardware, such as the Quest VR headsets. The company believes that the metaverse represents the next major computing platform, akin to the mobile revolution that transformed how people interact and consume information. This strategic pivot aims to capture a significant share of this future digital frontier, building an ecosystem that integrates social connection, entertainment, and commerce within immersive virtual environments. Analysts are closely watching Meta's ability to monetize these investments. The company is exploring various revenue streams, including virtual goods sales, advertising within virtual spaces, and potentially subscription models for premium experiences. The success of these strategies hinges on widespread user adoption and the development of compelling content and applications that draw people into the metaverse consistently. Current monetization efforts include the sale of virtual items and accessories for avatars, as well as the introduction of creator tools that allow users to build and monetize their own virtual experiences. The company has also been experimenting with advertising formats within Horizon Worlds, though user feedback on intrusive advertising in virtual spaces remains a key consideration. The recent focus on artificial intelligence is also intertwined with Meta's metaverse strategy. AI is crucial for creating realistic virtual environments, powering intelligent non-player characters, NPCs, enabling natural language interactions, and personalizing user experiences. Meta is reportedly investing heavily in AI talent and infrastructure, aiming to build a leading AI research and development capability. This dual focus on metaverse and AI suggests a strategy where these two technological frontiers are mutually reinforcing, with AI enhancing the metaverse experience and the metaverse providing a rich environment for AI development and deployment. However, the path forward is not without its challenges. Skepticism remains about the timeline for mass metaverse adoption and the profitability of virtual worlds. Some critics point to the substantial capital expenditure required and the relatively low user engagement compared to traditional social media platforms. Furthermore, the competitive landscape is intensifying, with other major tech companies and numerous startups vying for dominance in the metaverse space. Meta's ability to differentiate its offerings and build a sticky ecosystem will be critical to its long-term success. The market reaction to Meta's metaverse and AI initiatives has been mixed, with stock performance often reflecting investor sentiment towards these long-term bets. While some investors see the metaverse as the next growth engine, others remain cautious, citing the significant risks and unproven business models. The company's evolving monetization strategies and its ability to attract and retain both users and developers will be key indicators of its progress. But is this ambitious AI push a golden ticket or a potential misstep echoing past ventures? We'll break down the concerns and what it means for the future. Binance Alpha boosts Metaverse, 100 wild tokens airdropped. A major cryptocurrency exchange is making a significant move to drive engagement within the Metaverse ecosystem by distributing a substantial number of tokens. This initiative aims to reward existing users and attract new participants to emerging virtual worlds. Binance Alpha has announced an airdrop of 100 wild tokens to users who have accumulated at least 200 Alpha points. This reward is distributed on a first-come, first-served basis, encouraging active participation within the Binance Alpha platform. The Wild token is the native utility and governance token for Wilder World, a decentralized metaverse project that allows users to create, explore, and interact within a persistent digital environment. This airdrop represents a strategic effort by Binance Alpha to onboard users into the rapidly growing metaverse sector and to provide early exposure to promising blockchain-based virtual projects. To further incentivize trading and broader participation in the Wilder World ecosystem, Binance has also launched a $1.2 million wild trading competition. This competition encourages users to trade the wild token via the Binance Wallet or Binance Alpha. Such initiatives are designed to boost liquidity, increase trading volume, and foster a more dynamic DeFi and metaverse community. By integrating gamified incentives like trading competitions, Binance aims to enhance user retention and promote the adoption of decentralized finance protocols and metaverse platforms. The listing and airdrop of wild tokens on Binance Alpha underscore the increasing institutional interest in metaverse-related assets. As more virtual world projects mature, major exchanges play a crucial role in providing access and liquidity for these emerging digital assets. The Wilder World platform itself is focused on building a comprehensive metaverse experience, encompassing virtual land, digital assets, and social interactions, all powered by the Wild token. The token's utility extends to governance, allowing token holders to participate in the decision-making processes of the Wilder World ecosystem and to access exclusive features and content within the metaverse. Historically, airdrop events, particularly those associated with reputable exchanges like Binance, have often led to short-term price surges for the distributed tokens. For instance, past airdrops of tokens such as Gaia have seen significant price appreciation shortly after distribution, driven by increased user acquisition and trading activity. However, analysts consistently warn about the speculative nature of many newly launched tokens. While airdrops can be effective in bootstrapping a community and generating initial buzz, the long-term value of these tokens is heavily dependent on the underlying project's fundamental strength, real-world utility, and sustained community engagement. Sharp corrections after the initial hype are not uncommon, highlighting the importance of thorough due diligence for investors. Binance's tiered airdrop system is a notable aspect of its reward strategy, aiming to balance accessibility for a broader user base with exclusivity for more engaged participants. This approach helps in rewarding loyalty and encouraging deeper interaction with the platform and its associated projects. The success of such programs, however, ultimately hinges on the ability of the metaverse, projects themselves to deliver on their roadmaps, build robust ecosystems, and demonstrate tangible value beyond the initial speculative interest. The Wilder World project's capacity to foster a vibrant community, develop compelling virtual experiences, and integrate meaningful utility for its Wild token will be critical factors in its long-term viability and market acceptance. But with a massive trading competition also underway, how does this compare to other speculative plays? We'll look at the potential pitfalls and the broader market trends. Meta's AI super team faces scrutiny. Could it be another metaverse stumble? Concerns are mounting that Meta Platform's ambitious push into artificial intelligence, marked by the recruitment of top AI talent and significant investment, could face similar challenges that plagued its metaverse experiment. Venture capitalist Sarah Kunst of Clio Capital has voiced skepticism about Meta's strategy, drawing parallels between its current AI organizational restructuring and the company's previous, costly metaverse initiative. Kunst noted Meta's division into 4 parts, with the 4th division's purpose yet to be determined, suggesting it reflects an internal uncertainty or a lack of clear direction. This move comes as Meta CEO Mark Zuckerberg is reportedly investing billions to attract leading AI experts, including individuals like Alexander Wang and Nat Friedman, to spearhead the company's AI efforts. Kunst likens Meta's approach to assembling an NBA super team, a strategy often employed in sports to achieve dominance by gathering elite talent. However, she cautions against assuming success, referencing the 1995-96 Chicago Bulls, one of the greatest basketball teams of all time, and stating, "I don't think anyone's the '96 Bulls." This analogy highlights her concern that simply assembling highly paid, top-tier talent doesn't guarantee a cohesive and high-performing unit, especially within a corporate environment. Her primary worry is that Meta's AI division could falter due to a combination of factors that undermine the metaverse push. Potential ego clashes among highly compensated individuals, the challenge of integrating diverse talent into a unified company culture, and a possible dilution of intrinsic drive. Kunst specifically warned that Meta's AI endeavors might end up looking a little bit more like the metaverse days than the early days of Facebook in terms of the output here. She elaborated that success will heavily depend on Meta's ability to seamlessly integrate its expensive new hires, likening a failure to do so to a bad transplant where the body starts to reject the organ. Adding to the scrutiny, Meta has also faced criticism regarding its financial reporting of AI infrastructure. Prominent short seller Jim Chanos accused the company of potentially overstating its profits by employing extended depreciation schedules on its AI hardware. Chanos suggested that if the actual economic life of Meta's GPUs is only 2 to 3 years, then the company's reported profits are likely materially overstated. This concern arises as Meta plans substantial capital expenditures, estimated at $100 billion for AI-related projects by 2026, which CFO Susan Lee indicated will necessitate significant external financing. The company's stock performance has reflected some of this uncertainty, with shares experiencing declines amidst these discussions. Despite these concerns, Meta's stock continues to score well in certain market analyses, particularly for momentum, growth, and quality, and maintains a favorable short, medium, and long-term price trend according to some rankings. This suggests a divided market sentiment, with some investors still backing Meta's long-term vision despite the perceived risks and strategic questions surrounding its AI and metaverse investments. While Meta grapples with its AI strategy, another company is charting a course for the metaverse with a focus on resilience. What are they doing to ensure their virtual ambitions don't falter? Global Mofy's metaverse strategy, building financial resilience and scalable innovation. In the dynamic and often volatile landscape of the metaverse, companies must not only innovate, but also establish robust financial foundations to ensure long-term viability and growth. Global Mofy appears to be adopting such a strategic approach, focusing on financial resilience and scalable innovation to navigate the complexities of the virtual economy. The metaverse, a persistent, interconnected set of virtual spaces where users can interact with each other and digital objects, represents a significant opportunity for businesses across various sectors. However, it also presents unique challenges, including the need for substantial technological infrastructure, the development of compelling user experiences, and the establishment of sustainable business models. Companies venturing into this space must be prepared for a long gestation period, significant upfront investment, and the inherent uncertainties associated with emerging technologies. Global Mofy's emphasis on financial resilience suggests a prudent approach to managing the significant capital requirements associated with metaverse development. This likely involves careful financial planning, securing adequate funding, and maintaining a strong balance sheet to weather market fluctuations and support ongoing development. In an industry characterized by rapid technological advancements and shifting consumer preferences, financial stability is paramount. It allows companies to adapt to changes, invest in research and development, and maintain operational continuity without being overly reliant on short-term market trends or speculative funding rounds. Scalable innovation is another critical pillar of Global Mofy's strategy. The metaverse is not a static environment. It is constantly evolving, with new technologies, platforms, and user behaviors emerging regularly. For a company to succeed, its metaverse offerings must be designed with scalability in mind, capable of accommodating a growing user base, expanding virtual environments, and increasing complexity of interactions. This requires a flexible technological architecture, agile development processes, and a forward-looking product roadmap. Scalability in the metaverse context can manifest in several ways: increasing the number of concurrent users that a platform can support, expanding the digital real estate and content available within virtual worlds, and integrating new functionalities or services without compromising performance. It also involves the ability to adapt to different hardware and software standards, ensuring interoperability and accessibility across various devices and platforms. By focusing on scalable innovation, Global Mofy aims to build a metaverse presence that can grow and adapt alongside the market, rather than being constrained by its initial design or infrastructure limitations. The company's strategy likely involves leveraging emerging technologies such as blockchain, artificial intelligence, and advanced rendering techniques to create immersive and engaging virtual experiences. Blockchain technology, for instance, can be used to facilitate secure ownership of digital assets, enable decentralized governance, and power virtual economies through cryptocurrencies and NFTs. AI can enhance realism, personalize interactions, and automate content creation, while advanced graphics technologies are essential for delivering visually rich and realistic virtual environments. By integrating these technologies in a scalable manner, Global Mofy seeks to create a compelling and sustainable metaverse offering. Ultimately, Global Mofy's focus on financial resilience and scalable innovation positions it to navigate the inherent risks and capitalize on the vast opportunities within the metaverse. This strategic foresight is crucial for any entity aiming to establish a lasting presence in this transformative digital frontier. These are the key developments shaping our digital future. Join us next time for more groundbreaking updates from the metaverse and beyond. That was your rapid-fire update. Meta's high conviction buy potential, Binance's wild token airdrop, concerns over Meta's AI super team, and Global Mofy's resilient strategy all making headlines. Don't miss out on what's next. Hit that like button, subscribe to Metaverse Update, smash that notification bell, share your thoughts in the comments, and follow us on all social platforms for continuous insights.